Good morning, everyone. It is Tuesday, March 8th, and this is Morning Market Movers, where we do live analysis for day trading and take a look at hotspots in the markets for today. My name is Todd Rich. I'm with Nadex. With me, Brian Caprice from Keep Trading Simple. We are going to be looking at some volatility once again in the markets today. The news that's coming across the headlines right now, the U.S. is looking to ban oil imports from Russia. We kind of said this was probably on its way. The U.S. is prepared to do this alone because we don't need their oil. Oil is spiking a little bit higher on that news. Oh my God, the U.S. isn't importing Russian oil. Yeah, we don't import any of it to pretty much to begin with, which is kind of comical. So we will talk about that. We've got the Canadian dollar making some interesting moves, not moving along with oil. So decoupled a little bit there, which is interesting. But we'll take a look at oil. We'll look at the Canadian dollar. Equities were down overnight. Now looking to all open in the green. So volatility there, and then gold once again back on the table. So we've got lots to talk about. Before we flip over and jump into it, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. I also want to remind everyone that, and I will drop this link in, Brian's going to be doing a full-blown analysis in it's 3 hours. In 3 hours, in fact, I'll drop that link in right now if you're not registered. While we're going to run through things quickly right now before the open, Brian's going to run through everything in 3 hours. It'll be midday. You'll get an opportunity to see what had happened this morning, but it'll also talk about potential setups for the rest of the week. So getting ready for some other news that we do know is coming out this week, like inflation news. So plenty to be looking at there. Here you can actually see that spike in oil. And yeah, I'm like, wait, the U.S. doesn't import any. We're starting to see it roll over a little bit. We'll see what happens here. But yeah, I don't know. This is one of those weird ones. In any case, Brian, let me flip it over to you, let you get into it so we can run through oil, the Canadian dollar, equities, gold, and then, we'll know that everyone should come back in 3 hours and catch the full-blown session.
Yeah. Headlines are always really, really funny. I mean, you have that initial response that, oh, wait, the United States is doing it. And the question is, it's really not so much us. It's will
Everyone
other
else.
people do it? Yeah. And I mean, Germany already says, no, they're not. So I don't know. It's unfortunately, energy is one of those things that is kind of like a necessity of life. So it's hard to say that's it. It's this is not Lent. Like you just can't give up bacon for Lent. Unfortunately, the way that society works right now with transportation and everything else, it is something that we're ingrained in. So, again, the the 90,000 barrels, versus the what we get from Canada, being 4 million, it's really like a drop in the hat. It's like nothing. We can literally just shift one thing. In the last 24 hours, though, actually, of note, we were laughing about a little while ago. We're sharing with everybody else. OPEC, yes, OPEC. You guys know who they are. They're the ones that are controlling everything right now, oil-wise. They were in Texas for an energy conference, meeting with the API. Again, the report that we look at on Tuesdays, that comes out later today, that will give us the industry-specific inventory reports for Wednesdays. They were talking about shale and what type of, what type of. It's funny because we talk about shale. It's like, wait, what? Shale? I thought that was done. It was in the past. Prices are so high. OPEC is saying, hey, can we drive more oil out of your shale investments? And it was interesting, very, very interesting article talking about how, the Biden administration is making some comments that are not necessarily true about all these permits that we have. Is, having a permit for a piece of land doesn't mean that there's oil coming out of it. So he's like, there's a big disconnect. He's like, I don't think they quite understand what the permits mean. But again, shale is back on the table, which is interesting because this is a president that was so focused on combating climate change, and now we're going back to shale production. So,
right. I mean, short-term demand right now. You can't just turn. It's not a light switch, and to think that we can just do a light switch, and then one thing happens, and it's a pretty big thing. War,
Yeah.
It's gonna change, right? I mean, we got to be able to. Yeah, people do need fuel.
Yep. Yep. So in the last 24 hours, currency wise, it's a very interesting kind of setup. We're seeing some of the major currencies again. Some of them not moving much. Euro dollar, it's moved 6 pips in 24 hours. Pound yen minus 34. We're seeing the euro pound up 54, which is actually a pretty significant move, right? For that pair, that's a daily ATR. The one that is standing out, that is also going in with oil, and we'll break it down more today. The dollar CAD is up 95 pips in 24 hours. That's above a daily ATR. It's up, meaning that it's CAD weakness, but yet oil is up $5 today. So, kind of an interesting scenario. Again, Canada is like, I love this. Just keep us under the radar, make it even, make us even weaker, right? So people will buy more stuff from us. It's kind of for an exporting nation, they love that because it makes them more attractive. So, they're making a ton with oil right now. I guess we'll start with oil. You can see yesterday, we talked about how, filling that gap at 115.96 was an important area. And really right at 9 o'clock, that was the bottom. We saw the Europeans kind of diminish it back down again. It came up at that 50 and kind of gave us a kind of a quick little check down and then another check down. And then we just continue to base on it, which means it is now the launch point, right? We had our 1, we had our 2, we had our 3. We broke through on 4, we based, we pulled back, and now kind of it's continuing to rally higher. Now, we're up at that 24.92 area. It's not quite up. It got really, really close coming up and finding those same sellers up at that 126 level. Again, headlines of we're just not going to use their oil. Is it really going to affect things in the United States? Like, is that 90,000 barrels? Is that really going to solve the inflation crisis that we have right now? And the answer is no, not really. And the more that oil drives forward, the more that the inflation story is going to be, kind of out there. We know that inflation isn't everything, but now we're going to start feeling inflation. Because of it, gold has actually responded pretty well as well. Again, because the Fed is like, 0.25 Ukraine, but things are starting to get out of hand, and it's one of those things that are uncontrollable. Seeing this burst up just on a little bit of a headline there, I would actually be looking again. We know we had sellers up there in the past. I'm hoping that that's not the top. I'm hoping it goes a little bit further, but I really wouldn't be surprised if there's some traps out there today. This morning, I know again when I drop the boys off, I always listen to CNBC to see what the current morning trend is going to be, and obviously oil was out there, and they were talking about it. And what they were saying was, yes, it is probably going to take 1 percentage point off GDP at this price. It's going to cost each American with a car an additional $2,000 a year based off of what prices are right now. Will there be some type of government stimulus to make up for that 2,000? They don't know, but they said being that extra $2,000 is going to hurt the middle and lower class.
And we could do things like take the taxes off. I mean, there's things that the government could do, like
Democrats, and we can't lower taxes. Never happened.
So, and we'll see if oil stays up here.
Yeah,
I mean,
but I would say,
this
is one of those.
If you look back at 2008, at 2008 when we got up to these kind of prices, it wasn't but 9 months later. I think it was even less that we were all the way back down at $31 a barrel. In fact, we might have to take a look back then. So, I mean, the question is will oil stay up here for a sustained period of time? Is it going to hang up here for a year? I don't know. I don't.
And they said this is a little bit different than 2008. They did bring that up. So again, if you guys want to find that article out there, it's definitely something we can dive in more. But they said it is different because the auto industry was so beaten up and so low. Even with prices this high, it is going to be misleading because now that the supply chain area, bottlenecks are all opening up again. Auto sales can only go up. So before it was like, oh my God, auto sales came into a halt. We had to save all the auto companies. They're so beaten up right now because of supply chain. Even with oil prices this high, it's going to look like auto sales is going to increase. So they said the data is not really going to match what the actual situation was. So it's a very interesting kind of, we've never seen it, but I would say, finding shorting opportunities is probably a decent thing to do. Could it definitely go higher? I think absolutely. I mean, it only takes a headline where Russia says, fine, you guys can't have the oil. You can't have any oil. That would be their ultimate. They don't need to drop a nuclear weapon. All they need to do is say, that's it. Russia, you can't have any energy from us at all. We're going to cut it all off. If our economy's dead anyway, guess what? Boom.
Yeah,
and that would do more damage to Europe than because Europe has actually said if they cut us off, there is absolutely no supply in the entire world right now that could make up the 70 or what is it, the 7 million barrel or what is it, 7 billion barrels or whatever it is. Um, 7 million barrels a day, I guess. There's no supply in the entire world right now that could make up for that one. So he knows he doesn't need to send a nuke. He just needs to say, okay, fine, we're shutting it all off. That's it.
Right.
And
Yeah.
everybody would have to, so that's how much power that Russia has with how much supply that they, but that could obviously send it higher, guys. But otherwise, again, seeing this rally, people are seeing the headlines of, oh my God, the United States is cutting it off. This is going to give an opportunity for big money out there to start finding positions to start shorting. Remember, this is such a big hot button. They did mention it today. People vote with their wallets a lot of times. Seeing it this high, there's so much political pressure. Politicians are watching this. They're going to start coming out with things that start dropping this price back down again. So again, the focus will be crushing this down. People see a headline, it spikes, look for shorting opportunities. And again, Nadex gives you a good ability to do that without taking a lot of risk. For futures traders out there, you want to trade, oil futures right now, good luck. Any single headline we could get, this thing could jump $5-10 in either direction. There's a lot of money to be made, but a lot of money to be lost and a lot of risk. So again, do it the correct way. I'm going to go to the indices real quick. One of the things I'm going to point out too, indice wise, yesterday we saw a lot of volatility in the U.S. session. We know that this seems to be kind of a hot button. This 3650, we've kind of been pushed away. And remember, this is not like a tradable asset. There's not supply and demand for volatility. It's a gauge of something else. But we are seeing it kind of, again, we've been up here twice. And again, cutting things off raises the volatility a little bit. If there's no response, I think the VIX is able to drop down today. And even though, we're down 2.6, for the most part, all the indices are in the green. One in particular, one of the highlight is the ES. So ES yesterday, we talked about that 50% retracement that hit right at 9 o'clock yesterday. It came down and hit the 42, 43.50 level, came back up. And again, a 50% fib trader, a pure fib trader, would not have gotten entry here because it missed. It got front run on the fib. And again, this is why it's important to understand supply and demand. It did hit, again, the zone at the 50 and came back down again. But I wanted to do another draw on this one. If I draw the high from yesterday to the low, you can see we literally just a few hours ago, we ended up tagging that same level. That buying level that we used, where we had the 1 hit, the 2 hit, the 3 is where it based and it broke. It just hit it again. So although the VIX is down, ES is technically up. We had a nice little burst this morning from really, I guess it's from like the 1 o'clock, 2 o'clock time frame. Just before the European session, we got a big burst up in price and then kind of a little bit of profit taking, another push. And now we have a nice red candle, a nice green, which is not going as high. And the question is, in the next, 15 minutes or so, and again, let me drop this down to a 15-minute chart, we're getting our pullback here. If this doesn't breach this top and it starts to push back down again, there's a pretty decent amount from here all the way back down and really to the opposing level. So, people see this, they see green and say, oh, okay, well, here's the Globex highs. But understand, this actually is a triggered fib. So algorithms would have gotten short positions here. Just something to kind of think about.
Yeah.
Like I said, yesterday they would not have gotten an entry. They did get an entry today, and it is a level that was a prior area of buyers. It did base in there, so that is definitely a valid short. If you're already in it, you look like you're pretty good. But remember, after yesterday's big swing to the downside, today is probably going to be a little bit more stable, or a little bit more up, as it's kind of the opposite to it. That's what we have going on with ES. Again, NQ, kind of a similar scenario. We had that Harry Potter trade we talked about yesterday, and you can see it. It hit it the fourth time again and then sliced through. It did base and it did pull back. So again, you were able to get the entry, and you can see it just collapse all the way through. I think this one too, you can do kind of some of the same fib drawing on it. We'll dive into this one more later today. If you take the full draw, it has not gotten all the way back. There is a base there. So I think that if we do get some type of a rally today, I do think the 50% fib and NQ is something that you want to watch out for. YM also came down and it kind of bounced off this level, bounced again, and then started the base through and kind of chopped through it. So, it did hit the 50 yesterday. And right now, if we redraw this one, let's bring it down. And I think it's the same. You can see that we kind of, it used the 50 and now it's actually hitting the basing right above. So same thing. It's green, but it's kind of pulling back. And if you look, we had the same burst in this one. And again, this is the old level. You can see that I literally just extended it. There's a big area right here where we could do some testing.
Like
so
all filled in, yeah.
Yeah, I would like, and Russell's the same thing. It came back up and it grabbed the same level of basing right here, right? And again, if I extend this across, you can see it hit it. There's 3, 4, hit it, based, and we have that same pop. So although the VIX is down and everything is a little bit green minus the NQ, I do think that all of these have potential setups to go to the downside today. I'd love to say, hey, listen, yesterday was horrible. It's going up. I think we need to be cautious today. And then again, particularly because money's starting to go back into gold again. And I think the gold story, a lot of it has to do with commodities. Um, Commodities is one of those things. We know the Fed has already basically said they've said, hey, no, we're going back down to 0.25. Every single thing out there, inflation is getting out of control again. And I think, basically there's a lot of talk of, cutting Russia off from everything, but they have dollars, and now there's stories about the dollar being bad. Gold is coming back in the light. I know I said yesterday, listen, this is not the environment we want to be in, but until the Fed meeting, we're seeing oil go higher and higher and higher. And this is just inflation. It's just getting higher, 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 higher. And what's interesting about, gold going up, the dollar is not going up. The dollar is kind of standing still. So people are looking for that inflation hedge right now, thinking that we do 0.5, 0.25. It's going to get worse. And it doesn't seem like they have any desire to stop it. So that's kind of that inflation on type trade. And again, the Aussie
Yeah,
dollar is not showing the strength. Aussie dollar is weakening, which again, there's one proxy that's busted, and then dollar CAD is launching higher. Yet at the same time, their cash cow right now, oil, is also going higher. So again, the two major currencies that are linked with something else are being kind of broken right now.
yeah.
So
And
there's some rubber banding today. So
it's the inflation play that's playing
yeah,
out in the commodity and
yeah.
not so much in the currency.
Yeah,
So
yeah. So, yeah, a very interesting 24 hours. And again, there'll be some more headlines. There's no economic news today that we need to worry about. And again, we'll break down what we're going to have tomorrow at noon. So come back in 3 hours.
yep, we'll be back in 3 hours. So and do a full blown as well as what to look forward to the rest of the week, because there is some economic
There are
news.
some big ones later this week. Yeah.
Yeah, outside of the headlines right now, what everyone is watching, which is the war and anything else to do with inflation and commodities. With that, any questions for Nadex, please email us customerservice@nadex.com. Uh, Brian is also available. You can email Brian. His email's down there at the bottom, support@keeptradingsimple.com. Or feel free to email me if you got some comments on what we do every morning, what you'd like to see us do more of, what you'd like to see us do less of. Any feedback, todd.rich@nadex.com. It's officially a Nadex one finally, which is where it should have been to begin with. Yeah, and the recap. You know what? We talked about oil going higher. Yes, the U.S. is talking about not taking their oil. Is that really much of a big deal? Question is do other countries follow suit? Unlikely, because they don't have any type of replacement. The U.S. can do this pretty easily. We've got equities. Trying to open the green. We'll see what the follow through from yesterday looks like. Gold creeping higher. We know we've got that inflation story that is in play, and until the Fed actually starts jacking up interest rates, gold might continue to creep higher. But just realize that when they start raising interest rates, the cost of having gold starts going up, and it starts adding up. As they increase interest rates. With that, Brian, come back in 3 hours. I dropped the link there. If you like what we're doing, please give us a like on YouTube or on Facebook, wherever you happen to be watching us. If you're not able to join Brian later today, register. You'll get access to the recording. We will be back. Actually, Dan Cook will be covering for me tomorrow and the rest of the week. But Morning Market Movers is going on tomorrow, Thursday, and Friday. So please join us then. And until we see you again, good luck in the markets, everyone. Thanks for joining.